Hello, everyone. It's been quite a while. All right, so I'm going to give you guys a very, very simple strategy that requires no bias and it's very easy and highly profitable. And it just requires two steps. The first step is run on liquidity, which you want to see in the 1 hour time frame. And then the second is the change in state of delivery in either the 5 minute or 3 minute time frame. Now, this strategy works across all asset class. It works in the crypto market, it works in the commodity market, it works in the forex market, it works in the indices market. All right, let's get right into it. So now the first thing, like I said, is you're waiting for your own liquidity, and I want you to know what your own liquidity looks like. So here's a 1 hour time frame. This is the Euro USD. You could see that this low, you can see how price punched through it and then rallied. Okay. Then this high, you can see how price punched through it and then fell. Right. Now you can see this low again. Price took this low and then ran higher. So usually when price takes liquidity, it runs the opposite side. That's what we call reversal. And we all know that liquidity rests below swing lows and above swing highs. All right. So once you see this, you want to go down to a small time frame, either the 3 minute time frame or the 5 minute time frame. What you're looking for the change in state of delivery. Now, how does it look? Now, if price takes liquidity, let's assume this is a swing high. You can see how price pushed liquidity. When you go down to the smaller time frame, which is the 3 minute or 5 minute time frame, once liquidity has been purged, you want to look for the last up close candle because in this scenario, we're looking for a sell. Okay. The last up close candle was formed. You want to draw out the open price. Okay. For the anatomy of a candle, we have the high, the low, the bodies. All right. So if it's an up close candle, it will close above the open. So this level here is the open and here is the close. So it's an up close candle because it closed above the open. For a down close candle, all right, here's the open and then here is the close. So it closed below the open. Okay, so now our focus is on this candle. What we are waiting for is we're waiting for price to close below the open of this candle, and we can see that here. So this confirms our change in state of delivery. Now, if you want to learn more about this entry model, I'll leave a link to the video which I made previous weeks ago. When the change of state of delivery has been confirmed, that is when you see a candle close below the open price, you want to wait for price to return back to that level. Once price returns to that level, you sell. Now the reverse is the same for a buy trade. Okay, let's look at an example. All right, so here's the BTC USD. There's the 1 hour time frame. This happened today. This is the 30th of October. You could see what happened here. I think I should just use the replay. Okay. So here's a swing high. Okay. Once it gets purged, you can see it. You want to go down to the 5 minute or 3 minute time frame. These are consecutively up close candles. What does that mean? It means every single candle that follow itself are up close candle. All right. So if you look at this level here, this down close candles, you can see that this is not consecutively down close candles. Why? You can see an up close candle here. So it disrupts the flow. All right. But this candle here, you can see 1, 2, 3. They are both up close because they are consecutive. It means the candle after this is an up close candle. The next candle after this is also an up close candle. All right. So when you see consecutively up close candle, you don't want to use the last candle. You want to use the consecutive candles. All right. So you draw this line. This is the open price. Okay. You are waiting for price to close below this low. Once price close below this low, it confirms our change in state of delivery. Here is an order block. All right. So let's play. Good. We have a close. Here, just confirmed by this candle. All right. So let me just take it back. Good. So here is where we'll put our entry. Let me bring the position size to, all right. So your stop will be above the high of the order block. Then you want to aim for 3 hours. So it's already been made easy by this tool. So if you look at this level here, you can see that we have 2.4. So if you keep pulling, we'll get to 3. Means if you reach 1%, you get 3%. So we can see that we have 3. So I'm waiting for price to get to this level. Once it does, we'll be entering. Let me play. Good. Our order has been triggered. So let's play the full price. Let's see what happened. and then price got to our take profits. So you can see that's very simple. All you're waiting for is run on liquidity in the 1 hour time frame and then change in state of delivery in either the 5 minute or 3 minutes. So if we go down to the 3 minute time frame, you could see that it's still the same thing. Here, what you just need to do is you start from here. Okay, we'll pull out this line. If you look at these candles, they are all consecutively up close candles. You can't see any black candle here. They're all green candles. You want to start from the low, okay, for a sell. Now, once you mark that open price, you are waiting for price to close below that low. Okay, if you are selling, you want price to close below that low, and it happened by this candle. Once that occurs, you want to be buying at that level if price returns. So you can see how price returned immediately and then began selling off. So now let's take a look at the rules. Okay, as usual, I love to divide my rules into conditions, entry, stop, and take profit. So for conditions, the first thing you're looking out for is your run on liquidity in the 1 hour time frame, which is very easy to identify. Then the next thing you want to drop down to the 3 minute or 5 minute time frame. What you're looking out for is a change in state of delivery. And then thirdly, you want this to be occurring within a Q zone. It could either be an Asian Q zone, London Q zone, or a New York Q zone. This is where you get the best entries. Your entry will be at the open of the order block, just like I demonstrated in the previous example. Where do you want to place your stop? You place your stop above or below the confirmed order block, and then you want to use a maximum stop size of 20 pips. So now, if you're trading the Forex market, you want to work with 20 pips. If you're trading gold, you want to work with 5 to 10 pips. And if you're trading BTC, you want to work with max of 500. So it all depends on you. You can determine the maximum pips you would allow for your stop loss. And it's actually important to have a maximum stop size because you could see this strategy occur in certain market scenarios, especially when the news is being released, and those trades might not be profitable. The higher the stop size, the less probability for the trade to turn out a winner. All right. So you take profit, you want to use the 3R. That is, if you risk 1%, you want to get 3%. If you risk 3%, you want to get 9%. Okay, so let's look at another example. So here's the Euro USD, the 1 hour time frame. Remember, like I said, you don't need bias. You just need the 1 hour time frame, the 3 or 5 minute time frame for entries. So this is the 1 hour time frame. What you want to do is at the beginning of the day, you could see that each day is demarcated by this dashed line. This is Thursday. This is Friday. All right. So we're waiting for Monday. Before Monday comes into play, you want to identify every single high and low that you can find. So here's the most or the closest high and lows that you can find. So let's play and see which gets triggered. Okay, good. Now we have this low taken. Okay, we could see that it just played at the same time. So let's work with this low. So what we want to do is want to go down to a smaller time frame, which is the 5 minute time frame. All right, so here's the 5 minute time frame. You could see that we have consecutively down close candles. We have 1, 2, 3, 4, 5. Now, where do you think if price close above, we would have a change of state of delivery? Here, the open price. So if price should close above this high, this level, we have a change in state of delivery. So here's where I'll explain how to know objectively what time frame to use as an entry time frame, either the 3 minute or 5 minute time frame. So you could see that this is a level on the 5 minute time frame. So if we go down to the 3 minute time frame, you'll see that the consecutively down close candles began from here in the 3 minute time frame. All right. So picking the level to use, you want to use the time frame that offers the best risk reward. What do I mean? So if you use our position tool here, all right, if I draw this down, we have 12 pips, 12.3 pips. And remember, we're aiming for 3 hours. So we'll get 3 hours here. Okay, at this level, we have 3 hours, complete 3 hours, accurate. Don't mind the 0.2. But if I should move our entry level to this point, you will see that it has dropped to 2.8. So which do you think we should use? This gives a better risk reward. So that's what we're going to use. So we're going to use the 5 minute time frame. Okay. So I'm going to take this out. So we're going to wait for price to close above this level. Okay. So let me play. Okay, good. Now we have this candle. It has confirmed the change in state of delivery. The next thing, we want to wait for price to get to this level for a buy. Where will our stop be? Below this order block. This is a bullish order block, a 5-minute bullish order block. So let's put our entry here, stop here. I think we have 12.2 pips. Okay, so we are going to take this as high as 3 hours. All right, so we have 3 hours. So let's play and see what happens. And there we have it. So you can see we have 3 hours. So let's look at another example. So this is the Australian dollar. So here's the start of a new day, this line. So here's a Wednesday. This day will be a Thursday. So what you want to do is before the day starts, you want to outline every swing high and swing low you can find. So you can see we have this high here. So let's see what happens and which one gets purged. Okay. Good. You can see that this low has been purged, this low has been purged, and then this low has been purged. So we'll just bring this lower. Now, the next thing we want to do is to go down to a 5-minute time frame. We'll start from the 5 minutes. All right, we can see we have consecutive down close candles. You want to outline the high. All right. Then before you do that, you want to also go down to the 3-minute time frame. You could see the high starts here. So this gives a better risk reward. All right. So then we'll use this. So we're using the 3-minute time frame. So we want to wait to see if price closes above this level, which will give us our confirmed change in state of delivery. Like I said, if you want to learn more about change in state of delivery, I'll leave a link to the video. Okay. We don't have a close yet. This is not a close. All right, this is just a week. Price has not closed above the open. So we're still going to wait. Okay. Good. We have a close. So here's a close. Now, once price closes above, so let me just take this out. Once price closes above, we want to wait for price to return back to this level. It can return immediately or after some minutes. So we're going to set our 2 here when the low at this level. So this is about 13.2 pips. And then we're aiming for about 2 to 3, we're aiming for 3R. All right, we have 3R here. So waiting for price to return back to this level for a buy. So we can see this candle here was an immediate return. So we're going to play to see what happens. Ouch. So you could see that we lost this trade. This is just to let you know that it's not perfect. All right. So losing is possible. But then again, if you look closely, you'd see that something happened. All right. We got another opportunity. So I'm going to clear this. Okay. And then we are going to go over the same process again. All right. So you can see that this is the swing low that price took in the 1 hour time frame. Remember? Let me go back to the 1 hour time frame so you can see it clearly. So here's a swing low. And if you look closely, you can see that price also took another low, formed a new swing low, and price ran to take it. So let's go down to the 5-minute time frame. So here you could see the last down close candle. Here is just a single candle. It's not consecutive down close candle, just a single candle. We're waiting for price to close above this level. So we want to go down to the 3-minute time frame to see if we get. All right. So if we use this high, okay, it doesn't give us a good risk to reward, but here it gives us the best good risk to reward. So we use the 5-minute time frame. So all we're waiting for is a close above the open price. So I'll play it. Now you can see that price closed above the open price. Here we have a confirmed change in state of delivery. So the next thing you want to do is to wait for price to get to the open price here, this level, with your stop below the low of the swing. All right, this other block swing. And then we want to aim for 3 R's. Okay, this is 3R. So let's play. Price got now something I would like to show you guys. You can see how price returned immediately. You see the immediate return in price. So here would have triggered our buy order. This wick threw down into this bullish order block. All right. So let's see how price moves. Good. You can see that we have a take profit here. So the last example will be on gold. So here's gold, 1 hour time frame. Like we did in previous example, as usual, you want to mark out the swing highs and swing lows that you could see before the day begin. So here you can see this line here, the market each of the days. Here is Tuesday, here is Wednesday, and this day is Thursday. All right. All right. Now we can see that this high has been taken. So what we want to do is want to go down to the 5 minute or 3 minute time frame. Okay. Sorry, something I failed to mention is this line here that symbolizes the Q zones. So here's the Asian Q zone, here's the London close, here's the New York, and then here's the London Q zone. All right. So the indicator I use for this is the ICT zone 28 trades by Reflow FX. So you can just get it on your trading view. Just type this same thing you could see here, and you would get this on your charts. All right. So we can see that this happened where outside the Q zone. So we're not going to take this trade. We're going back to the 1 hour time frame and look for another swing high. So we have this swing high here. So I'm going to wait for price to see if price gets to the level. At this level, you can see that price has taken liquidity above this high. But if you look down, you would see that it's outside the Q zone. So if you go down to the 5 minute time frame, you'll see that it's outside the Q zone. Okay, so we'll go back to the 1 hour time frame, and then we're looking out for the next high to be purged. This. So let's play this and see what happens. All right, we can see that this high has been purged. Let's go down to the 5 minute time frame. Here we can see the change state of delivery because we have this consecutively up close candles. And then you can see how this candle here closed below the open price. And then we can see an immediate return. As soon as this candle closed, this candle here returned back to the level. If I draw out this, if you go down to the 3 minute time frame to choose or pick, we can see it's the same thing. Okay. Now, if we should take this trade, I think we should go back to the 5 minutes. Let's use our short tool, and then our stop loss above this high. Okay, aiming for 3 hours. All right. So let's just play and see what happens. You can see it's actually a loser. All right. Now, the major reason I actually expected this to happen because if we go back to the 1 hour time frame, you would see that we also have this swing high here. So these two swing highs, they are called relatively equal high. Doesn't mean they're at the same level, but relatively they are equal levels. So you want to see the next high taken before you want to take this. When you see two levels like this close to themselves, you want price to take the two levels before looking out for the change state of delivery in a smaller time frame. Okay, so I'll take all these out and then redraw our line. Okay, so go down to the 5 minute time frame. Let me take this out. So at this level, we can see we have this consecutively up close candle. So if we go down to the 3 minute time frame, let's see if we get a better price. So here we'll have the best risk to reward. All we are waiting for is price to close below the open price, and then we have it here. So what we want to do is we want to set our order at that level. We will be selling here, and our stop loss here above this high. We're aiming for what? 3 hours. Good. At this level here. Okay. So I'll play. And there we have it. All right, guys. I hope this was helpful. Please, if you enjoyed this video, give it a thumbs up. And if you haven't subscribed to this channel, please do so you can get more value from it. See you guys next week.